Well, Tesla is up to 234.90 cents. And so we're in the 30s now and net positive here on my Facebook predictions, or record of what I'm doing. It's not exactly correlated with my investment, but we're not far off. So I've illustrated to you that buying at 250 was somewhat of a mistake, because it went lower than it had in, I don't know, a year and a half, 2 years. Eventually, it went down to 177, and then it started creeping back up, and I told you I'm doubling down, I'm tripling down, taking the average cost of my investment down, so I have a stronger position going forward. And now we're in positive territory. And the movement upward is a little weak, and the reason for that is there are 40,000 shares that are being shorted, or about 1/3, 25% of Tesla shares are being shorted, which is suppressing the price. Now, I don't know how you continue shorting as you get record demand, record production, record delivery. Everything that they said that Tesla couldn't do, they're doing. And what we're seeing here is what Scott Adams calls two movies on one screen. Let's see how long I last in this truck. It's still morning, so, and I'm waiting on standby. But anyway, so I think the shorts are delusional. I think they're very speculative. They are banking on a highly successful person who has an almost perfect record of succeeding at everything he does. They're betting on him failing. When Tesla is got 80% of the electric car market, they have now the number one selling car in America, outselling the Toyota Camry, not by much, but they are doing it. And they're betting on all that falling apart somehow, you know. All of the major, I think most of the major car companies have said the future is electric. We're pouring billions and billions of dollars into electric car manufacturing. So they're starting from way behind. They can't sell enough cars. In fact, the only reason they were selling these electric cars was so that they can continue selling ICE cars, or internal combustion engine cars, you know, without having to pay a lot of taxes. And they're still, or, you know, whatever Ponzi scheme that they have for the green program or whatever. So a lot of people are like, well, Tesla wouldn't be doing so well if they didn't have all these credits from the federal government. Well, but everybody has access to those credits. In fact, right now, Tesla is doing this well, record quarters, as the credits for them are going away. But the credits for the other car companies, the subsidies from the federal government and other places, are still there. So Tesla is actually dominating the market at a disadvantage. And their technology is really far ahead. As I've said before, their Model S has longer range than anything else out there that they made 7 years ago, the Model S. Now their new Model S is going to have more range and possibly up to 400 miles. Once you get there, I mean, it really doesn't matter. Like, my car can do 400 miles until I get a new, fill up with gas, maybe a little bit more on the highway. So all that said is that is still holding down, and it's really an expensive speculation on their part, because they're having to rent these stocks, and they're paying for the right to sell them at whatever current price is, whatever they had their short as. And as it goes up, they can't sell it because they're going to lose money, so they have to buy shares to cover their short while they're renting these other short, continue to rent them. And they've already, all the shorts have lost billions of dollars so far. I mean, this is a net loss. And so the fundamentals are good. They're opening up a new factory that is supposed to have another lots of capacity in China. And then they're going to open up another one in Europe, probably not going to be built as fast as the Chinese. They can build things really fast. They have great regulation system or something, or a skeleton regulation system or whatever. Hopefully the thing doesn't fall apart or whatever. I doubt if the European one is going to build faster, or it's going to take longer. But anyway, the point is they're getting into these other markets. Now, looking at the slump in quarter two, you cannot ignore that. It was weak. They didn't deliver all the cars, but those counted for this quarter, which was a record. So going forward, it's likely they're going to go up, but there was a hole there. So it wasn't like it didn't happen at all. There was a little bit to that, but I think it's being over-exaggerated. And but the point is that you have two movies on one screen, as Scott Adams says. You've got two people looking at the same facts and coming to different conclusions, which happens all the time. But a lot of people are noticing it. It's like all these other people, they're seeing good, and all these other people are seeing bad. And I recognize human bias, right? So I've got a financial incentive, and so does everybody, to not be biased, because you don't make money by being biased, unless you have a talk show or something. So anyway, I just wanted to say I illustrated to you how you can break even. Now, if I'd have bought it at 250 and then it went down to 230, 220, and I said, oh, it's going down, I'm going to get out. Well, then I lost $25, $30 per share. And you could wait until you find the bottom, wherever the bottom ends up being, and maybe you'll get lucky and find it, and it won't go down, and it'll only go up. There's that strategy, and then you miss all of that loss. You get back at the bottom, and you make it up. There's different strategies, but I showed you the strategy, one of the other strategies I could use, or I use, and that is buy on weakness and continue to strengthen going forward. Now, if you're wrong, and you're going to be waiting a long time, but I don't mind going a year and a half on stuff like this. The discount buying might be over. I don't see a lot of bad news coming out, or even potential bad news. So we'll see. I think all of potential bad news is already priced in there, so it only has upward momentum to go. So if bad news comes out, I don't think you're going to lose a lot. And what you have seen is like the best news possible for this quarter come out, and it only went up, 7%, something like that. So there's a lot of caution, or a lack of big money people that are interested in the stock right now. And eventually they're going to have to change their mind, So there's some people saying that they expect the stock to go to 4,000 eventually, 5 to 10 years from now or whatever. Right now it was valued at a $40 billion company, and I think my expectation is for that to go to 400 billion at around 5 years or so, because you have the autonomous ride sharing capability possibly coming out, I think, in 2021. I think Tesla's going to be ready for that in 2021, and it'll be rolled out. And that's going to add a lot of value. I wrote down some numbers. I think Uber is worth 170 billion, and Lyft is worth about 40 billion. And if Tesla can have their cars drive people around autonomously, it's going to be very profitable. By the way, Uber and Lyft are not profitable companies by far. They're losing a lot of money, billions of dollars. Tesla is basically breaking even right now, and they're paying off like $1 billion debt last quarter, and they still, they had a little bit of a loss, but it wasn't much. when you're a growing company, you take losses. Netflix did that. They burned through a lot of cash. Everybody talked about that. So that's where we are now, and just wanted to give you an update on that. And I'm looking forward to, when it gets to maybe 300, I might make another video. And yeah, so hope you enjoyed that. I will be talking about Tesla moving forward, but it's a small part of this channel. I do other things as well. It's not really how you're supposed to have a successful YouTube channel, by talking about different things. But, it's my hobby. So I appreciate all of you who stick around and comment. And I'll do a shout out if you comment, maybe. So, all right. Talk to you later.